You know, in his absolute masterpiece, The Intelligent Investor, Benjamin Graham makes this powerful argument. He says that before you can even hope to succeed in the market, you have to make one single fundamental decision. And it's not about what to buy, it's about who you are. This one choice, it splits every investor into two very different camps.
So this is the big question Graham wants you to ask yourself. Are you a defensive investor or are you an enterprising investor? Your answer here is going to shape literally every financial decision you make from here on out. Because, let's be honest, before you can build a solid financial future, you have to be really honest with yourself. All right, so here's how we're going to break it all down. First, we'll look at that fundamental distinction between the two types. Then, we'll dive into what makes each one tick. After that, we'll get to the single most important decision you'll ever face as an investor. And we'll wrap it all up with the one principle that is designed to save you from, well, yourself.
Okay, first things first. Before you even think about picking a stock or a bond or anything really, Graham says, hold on. You have to answer this one simple question first. And this choice, it sets the entire course for the rest of your investment journey.
Now, this is what's so brilliant about how he lays this out. The two paths aren't about how much money you want to make. It's about the process. It's about your approach. Are you looking for something simple, something kind of low maintenance? Or are you ready to roll up your sleeves and do the really hard work of deep analysis? Let's kick things off with the defensive investor. I want you to think of this person as the marathon runner of the investing world, right? They're not looking for a quick sprint to the finish line. Nope. They are all about finishing the race without any major stumbles or injuries.
The number one goal here, it's all about protecting your capital. The mantra for this investor is basically, first, do no harm. They get that avoiding a huge loss is way more important than chasing some spectacular, flashy gain. And look, this isn't about being lazy. It's about being incredibly disciplined in a really smart way.
So the whole strategy is built around structure and, frankly, automation. It's like you're building a machine, right? One that's designed for consistent, pretty decent returns without you having to constantly tinker with it. And what that does is it frees you from the stress of watching the market every single day and lets you, live your life.
All right, let's switch gears to our second type, the enterprising investor. Now, if the defensive investor is our marathoner, this person is a mountaineer. They are actively seeking a tougher, more challenging path because they're hoping for a much bigger reward at the top.
The key words here are time and effort. This path is definitely not for the casual hobbyist. No way. It requires a serious, genuine commitment to the craft of analyzing businesses. And it demands more than just being smart. It demands the emotional strength to stand your ground even when the rest of the crowd is running in the other direction.
You see, being enterprising is all about the work you are truly willing to put in. It means doing the deep dive homework, actively making those buy and sell decisions, and having the skill to find opportunities that everyone else is missing. And you do all of that because you're trying to beat the market averages. Okay, so this brings us right to the absolute core of what Graham is trying to tell us. It's not about which path is better. That's the wrong question. The only thing that actually matters is which path is better for you. And this is just so important. The biggest mistake you can make isn't choosing the wrong strategy. It's choosing a strategy that doesn't fit your personality or your schedule or how you handle stress. An honest look in the mirror right here is worth more than any stock tip you'll ever get.
So according to Graham, once you've figured out who you are as an investor, your single most important decision is how you split your money between stocks and bonds. This basic allocation, like this classic 50-50 split you see here, this is the foundation. The entire rest of your portfolio is built right on top of it.
Just let that sink in for a second. Getting this one decision right, your overall mix of stocks and bonds, is going to have a bigger impact on your long-term results than any single brilliant stock pick you could ever make. It is the master dial that controls your financial future.
And that brings us to the final, and I would argue the most critical piece of this whole puzzle. Because once you've picked your path and set your allocation, you have to protect yourself from your own worst enemy.
So what is it? Is it a market crash, a recession, maybe a really bad stock pick? Graham says it's none of those things. The greatest enemy you will ever face is the person you see in the mirror every single morning. It's that temptation to just throw your plan out the window.
And just look at this cycle of self-destruction on the screen. It's perfect.
When the market's soaring, a defensive investor starts feeling greedy, right? They start acting like an enterprising one, buying like crazy at the top. Then, of course, the market turns. They panic. They switch back to being defensive, and they sell everything at the bottom. It is a guaranteed recipe for disaster.
At the end of the day, the best strategy is simply the one you can stick with, through thick and thin. Discipline isn't about being rigid for no reason. It's about having a plan that acts like a shield, protecting you from your own worst emotional impulses when everyone else is either euphoric or panicking.
So let's just quickly wrap this all up. There are 4 pillars here that create an intelligent investor. First, know yourself. Are you defensive or enterprising? Second, align your strategy with your nature. Third, remember that asset allocation is king. That's your main decision. And fourth, stay the course. Stay consistent. If you can master these 4 things, you've built a foundation that can stand the test of time.
And that really leads me to the final thought I want to leave you with today. Just take a moment and really honestly ask yourself this question. Answering it truthfully is the key to building not just long-term wealth, but also to achieving something that might be even more valuable, your own peace of mind.